Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Tuesday morning pre-market webcast. Okay, daily chart of the ES. Let's expand on what we discussed yesterday. We talked about a two-step process if you're a bull and you want to get up to higher prices. You have to close above the green line here, which is the middle Bollinger Band, the 20-day simple moving average. You have to close above it. Then you have to test it as support, and it has to hold. Well, the bulls tried to do the first part yesterday. We got above it, reached up into 1620. They couldn't hold it. They completely gave it up. And the middle band continues to be resistance. It's resistance again this morning. And it's gone on a month now. And I mentioned yesterday, and I feel very strongly about this. And I'm not sitting here trying to perma-bear it. This is what the chart is telling me. The middle band wants to be resistance. There have been, last 3 days in a row, we have tested the middle band. There are basically 8 days in the last 30 trading days, or now 8 days since June the 1st, where we have tested the middle band, and it has failed. It has failed to fulfill that two-step process. Close above, test as support, and fail. See here, closed above, tested, nope, and then we really headed down when that broke. So, there are only so many times that we're going to do this before the bulls say, you know what, have a good, have a really great summer. I'll see you Labor Day. Do what you're going to do. And that is how tests of the 200-day exponential moving average happen. And as I said yesterday, it doesn't affect the overall uptrend at all. And the 1553 was a 38% retracement of the total move. I'm saying the same things I said yesterday because it's the same market. We're not going to come out here every morning and reinvent the wheel. This is what we're looking at. The middle band is acting as resistance. It's doing it every day. And if it continues to do it, yesterday is going to be another lower high on this chart to go with this lower high and this lower high. After this high, lower high, lower high. We got another one. What's the chart telling you? The chart's telling me that if we break 93.25 here, which is yesterday's low, the chances of a rollover are pretty good. Now, that said, we have some big catalysts. Tomorrow we have claims. We got factory orders today. Tomorrow is ADP. You've got ISM services tomorrow. Thursday, of course, is a holiday. But even though it's a holiday, the Bank of England and the ECB are going to be speaking. And then Friday you've got jobs. So if you're a bull, you can still save it. There's a lot of people out there that want to be dip buyers, desperately want to be dip buyers, but they are tired of getting nailed every time we get above the middle band. And until we fulfill that two-step process, you have to switch out of buy dips mode to sell rallies mode. Since June 1, we've been living in the middle band to the lower band. As long as we're living in the middle band to the lower band, your priority is sell rallies. When we are above the middle band, like we are here, your priority is buy dips. So we are in sell rally mode. Sell rally mode has worked until you get to extreme levels. Okay? Now this is a 3-day third standard deviation nightmare. That's going to happen. But then you get your violent rally. Okay? So you have to keep your head in those situations. But we're looking at the same things today that we were looking at yesterday. My eye is fixed on the middle band. And if you are a bull, you don't want to lose 93. If you lose 93, it sets up a test of the 100-day, the yellow line there, which is 1579. Okay, everybody have a fantastic day. Mike Vacchi, PrincetonTrader.com. Check out the website. Come on into the chat room. It's a great two-sided tape, and it's we're having a lot of fun in there, and it's going well. I will be back tomorrow morning with another webcast. Trade 'em well, everybody.